Can a rental property is sold by you and not pay capital gains? In case you sell rented or maybe investment property, you are able to stay away from depreciation and capital gains recapture taxes by rolling the proceeds of the sale of yours into a similar kind of investment in 180 days. This particular like-kind exchange is actually known as a 1031 exchange after the appropriate segment of the tax code. How's capital gains estimated on sale of rental property? When an investment property is sold by you, any profits are actually subject to capital gains taxes. Rather, you compute the capital gain, or maybe loss, by subtracting the cost basis of the property from the net proceeds you are making through the sale. Is there a method to stay away from capital gains tax? In case you hold an investment for over a year prior to selling, the profit of yours is regarded as a long-term gain and it is taxed at a lower speed. You are able to lessen or even stay away from capital gains taxes by investing for the very long term, using tax advantage retirement plans, and offsetting capital gains with capital losses. What would capital gains tax be on $50? The capital gains tax rate will depend on the tax bracket of yours. In case you are in the 10% to 15% tax bracket, your capital gains tax rate is actually 0. In case you are in the 25% to 35% tax bracket, your capital gains tax rate is actually 15%. In case you are in the 39.6% tax bracket, your capital gains tax rate is actually 20%. What's the tax on capital gains for property? In case you market property which isn't your primary home, including a second home, that you have held for no less than a year, you have to pay tax on any benefit at the capital gains rate of up to 15%. Which states have no capital gains tax? 9 states have no capital gains tax rate: Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington. What's the capital gains tax for 2020? In 2019 and 2020 the capital gains tax rates are often 0%, 15% or maybe 20% for many assets held for over a year. Capital gains tax rates on nearly all assets held for under a year correspond to ordinary income tax brackets: 10%, 12%, 22%, 24%, 32%, 35% or maybe 37%. How can I file capital gains tax? Deductible capital and capital gains losses are actually reported on Form 1040, Schedule D, Capital Gains and Losses, and then transferred to Line 13 of Form 1040, U.S. Individual Income Tax Return. Capital gains and losses are actually classified as short or long-term term. In case another house is bought by me, I've to pay capital gains? Yes. The IRS allows you skim up to $250,000 off the benefit associated with a main residence when calculating capital gains tax. In case you are married, the quantity jumps to $500,000. You have not taken a capital gains exclusion for some other property offered a minimum of 2 years prior to this present sale made.